Yo, what is going on, y'all? Jay Trades here, back in a brand new video. And in today's video, I will be going over one factor that once I learned this and realized what I was doing, this really helped me improve my profitability in trading. Alright, so one of the keys I found in my profitability journey was rather than focusing on my losing trades, I started focusing on my winning trades. And now, before you guys get straight into me at the comments, yes, I do highly believe that from losing trades, you do learn much more than your winning trades. But in this video, I'm going to be talking about something a little bit different in terms of that. So yes, from your losing trades, you journal. You always want to do those things. You want to journal your trades. You want to journal down, write down your emotions during your losing trades, and look at the technical aspect of why you lost that trade. It's a really good thing to do. I always journal every single one of my trades, winning or losing. Always journal them. That's a very key thing you want to do, is keep journaling every single day, every single trade that you take. But there's one thing that I did learn and figured out was that you want to focus more so on your winning trades rather than your losing trades. And I'll show you guys an example real quick here of what I mean when I mention this. So right now I am currently on gold on a 5-minute time frame. I'm just going to show you guys a quick trade example of what I mean by this. So let's go back here real quick. We're on replay mode, obviously. Just trying to show you guys here real quick what I mean by essentially focusing more on your winning trades than your losing trades. So over here, from this time on, around June 6, 8:30 a.m. This is around when New York session opens. So as you guys can see, we have a major supply zone over here, acting as supply over here, here, multiple touches of a supply zone. So this shows you a really strong indication that this is a very strong supply zone. Let's play this out real quick on a 5-minute time frame. So essentially what I'll do is wait for a trend break or break a structure to get in. Essentially, let's see what time it is here, 9:35. Okay, so this is essentially Tokyo session. Usually I don't trade Tokyo session, but let's say we get on the break of structure right here, right? And then we have our stop loss right above here. So in this video, I'm essentially trying to say is you're able to control how much you can lose, right? You're guaranteed to lose this amount. You know how much you're risking per trade. If you're wrong, that is a definite answer. Like, you know exactly how much you're risking and how much you're gonna lose to the dot if you're wrong on the trade. But what you don't know exactly is how much profit you're going to make, which is very, very important. You want to know how much profit you're going to make? Well, you don't know because uncertainties on the market. And in terms of taking partials that people love doing, setting your stop loss to break even, things like that can definitely affect how much profit you're actually generating from the trade rather than just saying a 1-to-4 risk reward, for example. So in this example, let's say I get on the break of structure right here, have my stop loss right above this candle, and let's say we are going to be targeting areas of liquidity or a key level. So right here I do see a pretty strong key level right here, so I'm gonna add a horizontal line there. And let's see, we do have tons of liquidity down here. Usually, yes, I would mark this area, but sometimes it doesn't really hit this area exactly, since this is an area rather than a specific level of liquidity. It could, reject anywhere near here. So I'll just put it in the middle right here, usually right there. And so there you go. That is very, very perfect. And yeah, so these are basically my profit targets I'm going to be taking on this trade. This is essentially if I hit my last profit target at 1-to-5 risk reward trade. And what I'm trying to say here is, let's say the trade does go wrong. Let's say right now we are creating higher highs, higher lows, and then boom, we break structure here. We are now creating a lower low than this previous swing low right here. We're creating lower low. So essentially, what I want to see price is retap this level right here and then come straight back down, right? But if we are wrong, what happened was essentially this breaks market structure again. It goes down here, taps this level right here, or even goes towards this level right here, pretty key areas, and then it creates another new high up here. And that is when obviously we are completely wrong. I don't even want it to break this market structure right here, this key level. Don't even want to see that happen at all. That's my stop losses here. But essentially what I'm trying to say is, if you are wrong, you know exactly how much you are losing on this trade. So right now we have a 16 pip stop loss roughly, and let's say we are risking, I don't know, let's say we're risking $1,000 on this trade. If we're wrong, we are risking $1,000. So this stop loss right here is gonna be $1,000, essentially risking $1,000 to make profits around 5,000. All right, after commission and such, roughly 5,000. That's a really good risk reward ratio. Now what I'm trying to say in this video is you want to focus on your profit targets rather than your stop loss. Stop loss is definite. If you're wrong, it's gonna hit this exact price point and you're gonna get stopped out. You're gonna lose $1,000, but you don't know exactly how much money you're gonna make on the trade. Your profits are not definite, unlike your stop loss, right? Even if you're right, you have no clue exactly how much you're really gonna trade. So what you want to do is, this is essentially trying to tell us that your profits are controllable. You're able to control how much money you can generally make, but your stop loss is very definite. You're not really able to control that. That is a definite answer. So because we are able to control how much profits we are making, we want to maximize on that and be able to maximize the amount of money we can generally make from this trade. So this is why having either people take partials depending on your trading system. Personally, for me, I'm not a big fan of taking partials, but I do take partials at key levels or where I'm either at 1-to-1 or 1-to-2 minimum, right? I want to make sure my risk reward ratio in my whole trading system is very profitable. Even with the lower win rate, anything could happen. Have a lower win rate, have a losing week, you're still be profitable with a high risk reward trading system. So again, let's say we are able to control our profits here. Let's play this out real quick. Of course, we already know what's going to happen here essentially. So yes, we do get stopped out here, but let's just say we don't see that right here. So let's just move our stop loss up here. And then basically let's play out the rest of the trade. So trade goes in our favor, And as you guys can see, it is consolidating here, which is what it's gonna happen because again, this is Tokyo session, not like New York session. The volatility is not coming until later on. Let's see, what time is it now? This is London session, around the open of London session, so that's when volatility kicks in hard. Essentially what I'm trying to say here is you guys can control where you take your profits. I can control whether I take profits at 1-to-1 or I take profits at 1-to-5. That is a major difference in terms of how profitable you will be as a long-term trader, right? We want to have long-term profitability and not see this as a short-term game. You want to make sure you have consistency over long-term, and again, not a short-term, oh, this month I'm green and I'm a great trader. It's not always how it works, not how trading works, right? So again, if we can control our profit targets, we are able to control essentially our risk-reward ratio to the dot, rather than knowing, obviously our stop loss is definite, take profit levels are not definite, right? So we can control how much we are able to make. And once it started focusing on having really good profit targets and understanding just market intuition in general, looking at price action live so you can understand which profit targets are realistic to hit at. And sometimes you do have dynamic take profit levels, right? Let's say I do have a take profit level here. As you guys can see, we can find a key level exactly right in this spot right here. Let's say we have a definite take profit level there. But based on price action right here, I would even take profits here. Because looking at live price action, we have a really strong push through multiple key levels of support. We just broke through really fast. Again, looking at momentum while it's live is also very, very crucial. So as you can see, we broke through multiple take profit levels, and I would not be taking profits here because this level easily broke through in the 5 minutes. So there's that. And then again, we tried retesting this level, closed down at this neutral candle, which is really, really good sign right here. Essentially saying sellers are still taking control right now. So I would be taking profits around roughly 1-to-3 right here. 1-to-3, really good take profit level, rather than me taking profits at a 1-to-1 level. So again, that's one way where you can dynamically control your take profit levels to maximize the most out of your trades. You want to have your winning trades much bigger than your losers, and in order to do so, you want to be able to have good management of your winning trades, essentially, right? So let's say if you don't have good management, you're someone that doesn't understand live price action, you take profits, let's say you close out your full position at 1-to-1 or close out full position at 1-to-3. You're missing out on a lot more potential profit that could get hit. Yes, we don't know if it's going to hit this level right here, but you are missing out on a lot of potential profits, and that could genuinely affect your trading system because again, we know our definite stop loss. We know how much we're actually going to lose if we are wrong, but take profit levels are the key to how you can sustain profitability because that bigger wins allows you to have more cushioning for your more losses essentially. So let's play this out real quick. I would have taken 50% off or even 75% off at the 1-to-3 risk reward because that already is really good. And then at this point, stop loss break even, right? Let's play this rest out. Let's see what happens to this trade. Ooh, essentially it was getting really close to take profit, as you guys can see. And this is the exact reason why I don't like marking out liquidity necessarily at these exact levels, because again, this is a range, not necessarily exact level, right? I'm not a big fan of playing levels, but again, we do know roughly liquidity resides in this box area. We could even box this out real quick as liquidity, meaning as long as it touches this box, we're taking profits. So again, really, really good trade right here, as you can see. Essentially, this shows you guys how you should be able to control your take profit levels to maximize the most out of your winning trades. And again, losing trades are definite. You always want to make sure you have a manual stop loss. I wouldn't recommend having a dynamic stop loss unless you're really confident as a trader, because what happens is traders sometimes they'll see, oh, once it hits this level, I'm invalidated, but they still continue holding in a false hope of reality, right? You're being hopeless. It's not good to have a hopeful winning trade, right? Let's say it keeps on going. Price could have kept on continue upwards from here. Very unlikely because it's a super strong supply zone. Price could have continued up here. You would have lost so much off this trade. You would have completely like lost just everything. Like you would need so many green trades to even break even off of this loss. So I highly do recommend, especially if you're trading Forex, to have a certain level of stop loss that's set. That way you know your definite risk and your take profits are going to be dynamically interchangeable. And as long as you know how to set your take profit levels correctly and reading live price action, you will maximize your risk reward ratio and become a profitable trader, doing this consistently every single day and not letting your emotions control you. So that's gonna be it for today's video. If you guys did enjoy it, make sure to leave a like down below. Let me know what other content you guys are interested in learning about. Again, you guys can join my exclusive premium Discord if you guys are interested in that. You guys don't have to. Again, that's very optional, up to you. But again, the links to everything is gonna be down below. Funded accounts, to what brokers I use, things like that. So again, thank you guys so much for the support, and I'll see you guys in the next one. Peace.